Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. Today I'd like to take a look at the US E-minis and how they unfolded yesterday. Yesterday was Monday, September the 19th. Particularly because this will be a good example of how to use the large degree charts, in other words the 15-minute time frame when we're looking at 3 and 5 minute charts, to gauge the larger degree trend direction. So a good example of this. As I've said in many videos already, the STF is just like any other trend indicator or any other indicator. It will always be lagging, and there's nothing we can do about this. All indicators, because they work on past history, are lagging. Therefore they react slowly after a market turn has happened. So when you get lows coming in like this and markets rallying off them, the colour can be slow to change. So standard traders here would have been selling as the market would have been rising, and as such would have had a few losses. Losses are always okay as long as they're kept small and under control, and that's what our position sizing does. However, in this video I'd like to go over again, and we see this very often, and it's exactly what we were talking about in our training webinar yesterday. This is why we encourage all new MTPredictor customers to come into our training webinars, because we show you how to use the software. We teach you how to take it to more advanced levels. And this is where we use the 15-minute charts to use our leading indicators, which are our DPs and WPTs, to project in advance support and resistance zones, which we then use to gauge the larger degree trend. It's a way of working in advance, and that gets round the problem of indicators being lagging. So let's have a look at the 15-minute charts and see what we were talking about in yesterday's training webinar. Well, here's a quick run through them. This is a 15-minute chart of the Russell Index. You can see we had a decision point resistance there. If I take that low off, that was the low yesterday. What we did was looked at the last swing going into the high, which was this swing here. We then placed the DP on the chart from here, and actually we did that before the market opened. So that was done here. This is a good example of how the DPs are leading. So here you'd have had a click. That decision point would have been on the chart, the support zone on the chart before the market even opened. And as we scroll forward, you can see that the Russell Index gapped down, hit that decision point level, and then rallied all day. But the point being is that DP level was on the chart before the market even opened. So here on the Russell Index we had decision point support on the 15-minute chart. If I go through on the ES was close but not quite at decision point support. So it was very close here but not quite. The Nasdaq was not quite as clear as the other markets, with not really being at any support zone, but it was in the middle of nowhere. But the NQ, sorry, not the NQ, the YM tagged this support zone brilliantly. So I'll just take that off, just show you just like I did in the Russell Index. This is the last swing up into the high. So decision point, we click off this level here, and we did this live in our webinar yesterday. So this is what John and myself were talking about in the webinar, training webinar yesterday. So this decision point was on the chart before the market even opened. So you can see here the market gapped down, started to decline, just tagged our decision point level, and as you can see the market, the market rallied for the rest of the day. So this allowed you to actually nail the very low of the day in the YM yesterday. But the point being is, on these 15-minute charts we had 2 out of the 4 E-minis showing decision point support early in the day, therefore setting the low for the day. We had the ES, which was close, and the Nasdaq was sort of in the middle. So the point we were talking about is when some sell setups came through on the 3-minute charts, and we were talking about this live in the webinar yesterday. So when these sell setups came through, we were saying they were probably not good ones to take because of the 15-minute support coming in, and as such the market was probably going to be rallying throughout the day. So what does that mean for you as a trader? Well, it means when you're looking at the short-term 3 and 5-minute charts, because the 15-minute chart was at support and therefore the trend was going to be up, you should be avoiding the sell setups. So in other words, avoiding these sell setups and going for buy setups. So let's look at the US markets with this in mind. Now we did have a TS2, a small buy setup here on the ES, and as you can see that did actually get stopped out for a -1 hour loss. Loss was small and under control, which is okay. On the YM there were no buy setups. On the NQ, I'll come back to that in a minute. On the Russell Index, no buy setups. So the market I want to look at is the NQ, because we'd already decided that the market was going to rally. Therefore, we didn't really want to look at sell setups. And again, we actually said that in the webinar live as these setups were actually unfolding yesterday. So this isn't within the benefit of hindsight. We actually said this live in yesterday's training webinar. So looking at the buy setups that unfolded on the Nasdaq later, SGF was actually black at this stage, so standard traders could have taken these setups anyway, but you would have had added confidence that the larger degree trend on at least 2 out of the 4 USE minis was actually up. We actually had a couple of bites at this long position here and here. These would have been stopped out for -1 hour losses. Losses small and under control. We now put the analysis on this last setup here, which as you can see nailed the bottom beautifully, and here the market went up into our first target, this point here. We come down, the STF was weak, therefore we would have come out at the first target. But the point being is at the first target the profit was plus 4.4R. So if you even take account of -1, -1, and then even the -1R on the ES that I showed you a little while ago, so even with 3 losing trades all at -1R each, the plus 4.4R more than made up for those losses and actually put you in profit for the day. And that's the point of using the larger degree trend on the 15-minute charts, and also using correct position sizing on your trades as they come through on the 3 and 5-minute charts. All of these come together, allow you to keep your losses small and your profit large. And as we can see here, this is a really good example of how to make money overall. Now yesterday, yes, we were saying that yesterday was a very hard day, because yesterday President Obama was actually speaking, so it was quite a tricky day for traders yesterday. So it's quite nice that even on a very tricky and hard day where there were some losing trades, overall MTPredictor came up with a profit overall, and I think that's an excellent result to come out of a very hard trading day, particularly when there was fundamental news getting in the way of your technical patterns, and even when there were a few trading losses, that because we had a good large profit, to come out overall on profit for the day was actually a very good result. And it's always nice to show in videos like this harder days. There are too many gurus and software developers who only ever show brilliant, huge, profitable days, and that's just easy to do. As traders, we know that markets don't always do that. There are days when it's harder, and it's good to have an example like today, or this particular day here, where it was a very hard day. However, the risk control and the position sizing allowed you to come up slightly in profit for the day as a whole. So a good example of MTPredictor on what was a hard trading day, but profits overall as well.